AG here. And as an Asian guy, I can usually tell when other Asian guys are quietly planning something big. What China has been doing for the last 14 months should genuinely concern anyone holding US dollars. Let me set the scene. You're checking your retirement account. The numbers look fine, maybe even reassuring. Meanwhile, halfway across the world, a sequence of events has already begun that could reduce the value of every dollar you own by 20, maybe 30% over the next 3 years. And I am willing to bet you didn't hear a word about it on the evening news. On November 19th, 2025, while American families were carving Thanksgiving turkeys, something historic happened. China and the United Arab Emirates finalized the first ever international trade settlement that completely bypassed the US dollar. No SWIFT system, no American banks, no dollar involvement at all. The trade was executed through a digital platform called mBridge, a system that had already been quietly operational for months, while US media focused on celebrity drama and political theater. But here is the part that kept me up at night when I realized what had actually happened. This wasn't a test. This wasn't a pilot program. This wasn't experimental. This was the public launch of a system that had been under construction for years. And while that system was being built, China was quietly stockpiling the one asset that still gives credibility in global finance: gold. For 14 consecutive months, China bought gold relentlessly. They didn't slow down when prices hit record highs. They didn't pause when Western analysts called the strategy reckless. They didn't flinch when gold crossed $4,000 an ounce. They bought anyway. Not emotionally, not opportunistically, systematically. Because this wasn't investing, it was preparation. Let me show you what most Americans have absolutely no idea is happening. In just 14 months, China increased gold from 5.5% to 8.3% of its total reserves. That roughly 74 million ounces now sitting in vaults, worth more than $330 billion at today ORS prices. That isn't diversification. That isn't portfolio balancing. That's infrastructure. Here's how you know. Investors care about price. They wait for pullbacks. They chase value. China didn't. Month after month, whether gold was $3,800, $4,000, $4,200, or $4,500, China bought with mechanical consistency. About 30 tons over 14 months, according to official data. When buying is that disciplined and that indifferent to price, you're not watching speculation. You're watching someone build a foundation. Now, connect this to what happened on November 19th. mBridge didn't appear overnight. It was developed over 4 years by the Bank for International Settlements, working with China, the UAE, Thailand, Hong Kong, and Saudi Arabia. The goal was simple but radical: allow countries to trade in their own currencies without touching the dollar. And then something critical happened on October 31st, 2024, something barely mentioned in US media. The BIS stepped away. They handed full control of mBridge to the participating central banks, with China leading the technology group. Think about that timeline. Control transferred on October 31st. Less than 3 weeks later, China executes its first real dollar-free trade. That isn't coincidence. That's rollout. And throughout this entire development period, China kept buying gold because they understand something our politicians won't say out loud. Alternative systems only work if they're trusted. And trust in global finance still comes down to one thing: gold. Here's the part that should worry every American. According to BIS data, mBridge already has the technical capacity to handle 38% of global trade flows outside the SWIFT system. Not theoretical, not under development, operational, right now. While we argued about domestic politics, China built a parallel financial system and stocked the collateral to back it. So let me ask you a simple question. What happens to your savings when global demand for dollars drops? Your stocks are priced in dollars. Your bonds pay in dollars. Or your cash accounts are denominated in dollars. If countries no longer need dollars to trade, every dollar you own buys less. Not because companies failed, not because you made bad decisions, but because the currency itself becomes less necessary. Let me make this concrete. Imagine you're the finance minister of Thailand or Malaysia buying oil from Saudi Arabia. Under the old system, you convert to dollars, pay fees to US banks, wait days for settlement, accept dollar risk and sanctions risk. Now Saudi Arabia offers mBridge. Trade directly, instant settlement, minimal fees, and excess balances held in gold-backed digital currency instead of US treasuries. Which system do you choose? That decision is no longer hypothetical. By October 2025, UAE officials confirmed hundreds of real transactions worth billions had already cleared through mBridge. Hundreds, not tests, real commerce. And it's growing monthly. Now here's what really caught my attention as an analyst. China's gold buying showed zero reaction to market events. No panic buying during crises, no acceleration during dips, no hesitation during rallies. January to February 2025, gold above 4,200. China bought. March to May, prices stabilized. China bought. Fed announcements, geopolitical tension. stock volatility, didn't matter. That pattern screams one thing: strategic necessity. China isn't hedging inflation. They're hedging the dollar. They're staring at $36 trillion in U.S. debt and asking whether reserve status survives indefinitely. Gold doesn't care about congressional dysfunction. It doesn't care about Federal Reserve policy. And it can't be frozen, sanctioned, or printed. Remember why the dollar became the reserve currency in 1944? Because it was backed by gold. Then, in 1971, convertibility ended, and we've been running on faith ever since. Faith that we'll manage debt responsibly. Faith we won't weaponize the currency. Faith. The system remains fair. China looked at that and asked, why rely on faith when you can rely on metal? And they've been acting on that answer for 14 straight months. Here's why this matters to your future. mBridge countries control $8.4 trillion in annual trade. Every transaction that moves off dollar settlement reduces demand for U.S. currency, not through collapse, but through erosion. Imagine planning a $5,000 European vacation. 2 years later, the dollar is 20% weaker. Same trip, same hotels. Now it costs $6,000. That's the hidden tax of reserve erosion. And this isn't just China. In 2025, Poland shocked markets by buying 95 tons of gold. Turkey, India, Kazakhstan followed identical buying patterns. World Gold Council data shows over 1,000 tons of gold bought annually by central banks for 3 straight years. That's coordination, not coincidence. These countries represent nearly half of global GDP. They're voting with their reserves, and they're voting against dollar dependence. Why? Because they watched Russian assets frozen, Venezuelan gold seized, Iran locked out of SWIFT. Gold in domestic vaults can't be frozen. That's not paranoia. That's prudent treasury management. Meanwhile, mBridge processes transactions faster and cheaper than SWIFT. Days become seconds. Fees drop from 70 basis points to under 10. Businesses notice. CFOs notice. And once they switch, they don't switch back. Each transaction represents permanent dollar demand destruction. Markets already see it. In 2025, the dollar fell 10%. Its worst year since 2017. Worst first-half performance in over 50 years. Investment banks adjusted fast. Gold targets $4,800, $4,900, $5,000 plus. These aren't hype forecasts. They're structural. And even those may be conservative. Here's why. If mBridge processes $1 trillion in trade by late 2026, the system requires hundreds of billions in gold reserves to support settlement. That's 50+ million ounces of new demand, on top of existing central bank buying. Annual mine production is only about 95 million ounces. Math wins. Prices must rise. By my calculations, gold needs to trade between $5,200 and $5,500 to support projected volumes. That puts today's prices in what may be the final accumulation window. This isn't fear-mongering. This is arithmetic. China already built the system. They're buying gold because they expect it to scale fast. Payment networks grow nonlinearly. 1% becomes 5. 5 becomes 15. 15 becomes dominant. And when trade doesn't need dollars, dollars lose value. Quietly, relentlessly. Your savings, your retirement, your future purchasing power all live in dollar terms. If global demand drops 20%, your dollars lose 20% of their real power. Banks see this. Central banks see this. China has been acting on it for 14 months straight. The transition window is now through 2027. That's when positioning matters. This isn't about panic, it's about awareness. You can't stop this shift. You can't vote it away, but you can prepare. Review your exposure. Understand the system changing beneath your feet. The evidence is public. The math is clear. The transition is already underway.